Hi, welcome to the Market Alert for Wednesday, the 2nd of July 2025. So, violent moves. Stocks start second half of the year with Momo massacre and a massive short squeeze. Bullion bid and bonds battered. Have investors front run the positive seasonality? Well, we'll see, won't we, when we get the tariffs this next week. Tech lags while T-notes flatten a strong JOLTS report, and the Senate passing the OBBB take the headlines. And that's the big bill, isn't it? The BBB thing that Trump is trying to get through Congress at the moment. US stocks were mixed, with Wall Street pulling back from record highs as participants digested data, developments in Capitol Hill, and central bank rhetoric. Well, they're out all week, aren't they? Fed Chair Powell did not rule out a July rate cut, as he stated that he wouldn't take any meeting off the table or put it directly on the table. So he hasn't got a clue what he's doing, has he, by the sounds of it there. Yesterday, the JOLTS numbers came out at 7.7 million, so that's obviously a bullish indication that the economy is doing well if it's as the openings. But then the month before, it was 7.4, so not as glamorous as it looks there. Right, let's have a look at the markets and kick off with the Dow. And as I've said for the last few weeks about all-time highs, and the markets that didn't get to the all-time highs would chase and head towards there, and we can see this is continuing in the Dow. We've got this rise here up to the 45,077 level, so we're piling on the points as far as the Dow is concerned. Plenty more to go there yet, and yesterday you can see how easy it is to take advantage of this from the open in the cash market. Just power the market up based upon the JOLTS numbers being positive, and overnight you can see the market also hitting yesterday's high above the DP, above the close, all of the averages in the right order there at the moment. But each time the market moves higher, it can create a bit more weakness, particularly when you look at the daily chart there. We have got the rising lows, but you're going to get days when you get a reversal, so just be mindful of that as well. In the German DAX, this one had a bit of a pullback yesterday. Lagarde's been out for the last couple of days. Maybe she said something that's not been quite as encouraging. Prices having pulled back there. Like I just said, with regards to the Dow, you get a day where you get a pullback, and then you get the resumption of the trade to the upside. At the moment, still above the 50 EMA in the daily chart, and just coming off the support in the 20. We've got a bit of a crossover in the momentum though, but that can soon switch. The key here is to keep the momentum above the 80 level. In the 30-minute German DAX, you can see that down day perfectly displayed there. We had a couple of green bars where the market came back, stopped at the 200 MA and the S1, and then continued lower down to the S2 before finding some support and then moving up on the overnight. Struggling with the 200 MA in the 30-minute chart at the moment, but above the DP, the 5 MA, you can still see prices above that, and the 20-bar moving average. However, given the weakness in the backdrop, don't be surprised if we get a bit of a rush down to the low and then a pickup off the low to come back. The high of this one also not too far away, which you can see there as well. And in the S&P 500, we just had a new all-time high on the overnight, 62.17. No surprise there. It used to be a case that the market would make a new all-time high and then pull back quite aggressively. Now it's a piece of cake to hold the market with the algos and the high-frequency trading, and of course now with AI, even easier as well. You can send out all sorts of tweets and nonsense that will move the market. So you can see yesterday moving up a lot choppier than the Dow in the cash market for the S&P, and overnight the electronic market, we've seen prices break out there and sitting above yesterday's high. Meanwhile, despite problems in the UK with Starmer, well, there's been problems from day one. You can see the market there trying to break out despite a lot of political uncertainty, and also I think there's a bit of a rebellion brewing in the background. But the market will ignore all of this and head back towards the all-time height of 8,901. And in the 30-minute chart, so there you see, ignore the news, move it back to the upside, and keep the market and the investors happy. So let's have a look at what the dollar is doing. Well, ahead of the NFP numbers on Friday, the dollar at the moment is trying to find a bit of support. As you can see yesterday, we have moved sideways to higher. Let me just reset this so we can see where we're at. So overnight, dollar also starting to move higher. So let's have a look at the impact of this on the metals. Starting off with silver, it's had zero impact, thankfully. The market still sideways, so we've also got a bit of demand coming in there on Tuesday. No, that's Monday, and then Tuesday the market moving higher and then getting slammed, and then overnight finding a bit of support there. So in the 30-minute chart you can see that we moved higher and then slammed back down, only 50 cents. I mean, it's no great shakes. And then overnight they've had a bit of a, let's test the 36 level, and they moved it lower, brought back in, and now it's sideways to higher. Meanwhile, in gold, moving to the upside, unlike silver, so that's going to have an impact on the gold-silver ratio. You can see there yesterday moving up nicely, bit of a pullback there, bit of a shakeout overnight, but now resumption back to the upside there. So let's have a look at the gold-silver ratio. And no surprise, we see this moving back to the upside because obviously gold was stronger yesterday than silver. So it's interesting to see whether this trend line holds and we then get a movement back to the downside. If not, then we're going back up towards the 95 level there for the gold-silver ratio. Right, let's have a quick look at yesterday's market action. So in the pre-market, prices were sideways, which you can see there, and then they moved lower, and that set the tone for the rest of the trading session. The market then spiked up, but didn't hold whatsoever. We got to the 200 MA, and then we see prices close back below the 200 MA with high volume, and that again set the tone for future prices to move lower. So back below the 200 MA, we get a signal, and then we go all the way down to the close, and then of course you see the buying coming in here, try and bring the market back to the close, which they succeed in doing, but not for long, as prices then resumed the downside trend, which you'll see in just a moment. So there we continue lower, and then we get another bounce back here as we try and get back to the close. But as soon as we hit the close, we also encounter the 50 EMA. The market then moves back to the downside, another sell signal down to the low. And as I've said before, you think, well, we got the buying in there, we should be fine at the low. But they do that classic where they retest and spike prices below the low that was made, or the low that broke the previous day's low. And then prices once again head south. And we'll see the market come back though. So we've had a double test now down the low in the lows, and the market coming back there and trying to get back above the low, which it does, but it then encounters the 50 EMA once more, and we see prices starting to move to the downside once more in just a second now. So back to the sideways move. We then get another potential buy which is filled and then taken out, and again that 50 EMA that had already set the tone continuing to be grief for the market. So as we go through the mid-mornings all the way up through to the release of the JOLTS numbers, the markets are sideways there, which you can see. And then unfortunately, as we get to the JOLTS, Windows decided to have a fit, and there was no more data to be collected there. So let's just switch to the historic chart from yesterday, and you'll see prices continuing to move to the downside, and then we see them coming back, and then at 2:30 moving back to the upside there. In fact, the times are out on this chart. This is a different one that I use, it's not the one that records. Let me just change the time because it's 2:30. This is there we go, that's more like it. So we can now see where we are. So we at 1:30 we had the news, which is in this area, so the JOLTS numbers causing the market to move lower. Then we kick off, and you can see the volume there at the 2:30 Dow opening up to the 200 MA, and then again we get close here, market puts in the sell, and we move down there. So back down in the afternoon and then into the evening. But what are we doing now? What's the market looking like? So at the moment we're down towards yesterday's DP level, also finding support at the 23,800 level as well, which we're trying obviously is to get back to that all-time high that we have seen recently. Let's just pull that up just to remind you of the number, 24,487. So let's see. Right, what have we got economic news wise today? Economic news again. It's no, that's yesterday's. Say central bankers are out in force again, but there's only Lagarde. And as it's Wednesday, of course, we've got the ADP numbers. Also keep in mind as well that we're heading towards the Independence Day celebrations as well. So today is the 2nd, 3rd tomorrow, and 4th Friday. So you could see the market being a bit quieter as well. Okay, that's it for this one. Let's see what happens today. And as ever, thanks for watching. See you in the next one.